Good afternoon. Oh, come on. I know you're doing a great job talking to each other, but good afternoon. One more time. Good afternoon. All right, we'll work with that. I'm Buckley Brinkman. I'm with the Wisconsin Center for Manufacturing and Productivity. I can't tell you how glad we are to have all of you here this afternoon for the second annual Wisconsin Manufacturing Report. We're pretty enthused about the results and the picture that it'll give you of manufacturing across the state of Wisconsin. In just a matter of an hour, you'll have a lot of information that can lay a foundation for other exploration of issues that you may see come up in your business and also in your community. So we're very happy to have you here. We're also very happy to have First Business Bank here. Without their sponsorship of this, none of this would be possible. So I'd like to invite Brian Swanson up to the podium, say a few words.
Thank you, Buck. First Business Bank is certainly proud to be the sponsor of today's second annual survey readout, and we're thankful for the continued partnership with the WCMP and the WMEP. With that, we hope this is many years to come and some trends will be established. Buck learned in the process that 2 data points don't make a trend, but in future years, we hope that those can be identified. As most are aware in this room, as goes manufacturing, so goes the Wisconsin economy. That's because the proportion of manufacturing jobs that exist in Wisconsin as a proportion to the total Wisconsin economy. In fact, Wisconsin employment ranks number 9 amongst all states for total employment in the manufacturing space and number 1 for employment on a per capita basis. With the health of manufacturing being the critical driver to the health of the Wisconsin economy, we hope that this survey provides some insight to the leaders in this room that can help guide their respective businesses to compete and succeed as we navigate these current economic conditions. First Business Bank has alignment in this space because serving manufacturing is core to our mission, in large part because of our business model. It's in our name, First Business Bank. First Business Bank is a Wisconsin-based bank that was founded almost 30 years ago with a primary presence in the Milwaukee, Madison, and Fox Valley markets. We work exclusively with both businesses and the private wealth needs of the owners and executives of those businesses. We have no retail component, and that allows us to focus entirely on business banking. This, combined with the entrepreneurial spirit of First Business Bank's decision makers being present in the market, allows us to bring an unrivaled customer experience to our clients. This is validated through our Net Promoter Score, which we test annually, and is currently nearly double the industry average. First Business Bank has about $3 billion in assets currently, in addition to the traditional commercial banking serving the lower to middle market space. We also have business units dedicated to asset-based lending, equipment finance, accounts receivable financing, and SBA lending. We appreciate the opportunity to be part of today's session, and with that, I'll turn it back over to Buck. Thank you.
So let's jump in. This is an in-depth look at Wisconsin manufacturing. I think most of you have gotten surveys in your email and had someone say, hey, could you fill this out for me? And we got frustrated with that because we thought it was rather random. And we also got frustrated when we saw people getting 200 responses saying, oh, this is how things are all the way across the state. So we endeavored to do this a little bit differently and engaged Rob Autry, who's a professional pollster, to go out and have 400 20-minute interviews with executives from manufacturers across the state. And you'll see from the data, it's an excellent cross-section of manufacturing, both by geography and by industry. We didn't do enough to do both, so if you ask me to go both crosstabs, we're a little weak, but I think you'll get a good handle on what's happening in manufacturing in different parts of the state and to make some good decisions for your business and what you want to do around manufacturing. So when I looked at this data, I thought, what would help you take all of this in? I thought, let's find about 5 points that I found very interesting going into this. First of all, you want to start a discussion with any group today, ask them if we're in a recession. The opinions range all the way from we're about to die to we're doing just fine. And in this group, it was very strongly, we are not in a recession. And the bottom line was, how can you be in a recession when we're at 3% unemployment? Number two, workforce. Sitting at the table before the presentation, yep, we're going to hear more about workforce, and then some more about workforce, and workforce, yep, we'll give you the data. We think we also have some insights about how that's changing operations, not just with HR functions, but also across operations. Inflation, the biggest comment in our focus groups was that any kind of quote that's put out there right now is just an estimate. And very often manufacturers are dealing with the price is at the time of delivery. And the quotes are just an estimate. And then we've consistently, while we've done these polling and these spot polls that we've done, found a segment of manufacturers that are under pretty severe stress. We're not sure what that means. We're not sure how big the number is, and we're not sure if it's just the normal turnover of business or if it's really something significant affecting the base in Wisconsin. But after we get more than 2 points, maybe we'll have a trend in that area. And then finally, something that was a bit of a surprise to us was the effect of COVID yet, and that there's still a hangover on manufacturers. We know how it upended all of our lives and changed the way that we look at our businesses, but to see manufacturers still struggling with that was very interesting to us. So those are 5 things to think about while Rob is going through the data, and something that you can use to frame up some of the conclusions that we brought. So without further ado, I'll give you Rob Autry from Meeting Street.
Awesome. Good afternoon, everybody. Can you hear me okay? Perfect. Awesome. So as Buckley kind of teed this up, I'm going to walk you through the survey findings from the study, which we conducted starting at the end of July through the month of August. As Buckley noted, this is 400 manufacturing executives. So these are owners, operators, CEOs, COOs of manufacturing companies based here in Wisconsin. And this is the second year in a row that we've done this particular audience of 400 manufacturers. So as you look through this data, there's a margin of error plus or minus 4.9%. In addition to the survey data, we're going to also talk a little bit anecdotally about some of the things we heard in the focus groups. And we conducted 5 focus groups, 4 of them in person, between September 13th and September 15th. And then we did one virtually statewide on the 15th as well. In total, among the focus groups, which are smaller discussion sessions, we spoke to 19 manufacturing executives across those 5 focus groups. And the great thing about this, too, is now that this is the second year in a row, we actually have another data point. Not a trend, but another data point to kind of compare this to. Also, Buckley noted that we took great lengths to make sure this was a representative sample. So based on census stats, we had a pretty good idea of what the manufacturing community looked like in the state, and we modeled our sample to make sure it was representative. So here's just a quick comparison of the demographics of this particular survey compared to census stats. Finally, before we kind of dive into this, we have 5 regions across the state, and a couple of these slides that will break out. And here are the 5 locations you can see. Here we've got the Northwest location, the West location, South Central, which is around Madison, Southeast, Milwaukee, and then the Northeast. And there's a few counties that are in more than one region here. But these are 5 regions you'll see as we kind of break through the data on a couple of key slides. I'm going to start with sort of the big picture here, kind of the view from 30,000 feet. Because we asked manufacturing executives from the very beginning, would you say that the business climate in the state is heading in the right direction, or is it off on the wrong track? And 50% of manufacturers today said the state's business climate is generally heading in the right direction. 39% said it's off on the wrong track. So generally positive. Not as positive as we saw a year ago, though. We saw right direction numbers at 55, wrong track at 34. So we've seen a little bit of an increase in wrong track by 5 points and a decrease in right direction. But for the most part, executives tend to think that the state's business climate is heading in the right direction. But when we turned the question specifically to the economy, we had a little bit different response. We asked manufacturers, do you think Wisconsin economy is growing, slowing down, mostly flat, or in a recession? And Buckley mentioned kind of, most folks in the focus groups didn't feel like we were in a recession. We also heard some in the focus group say, well, technically, I guess you could call it a recession. We may not necessarily feel that way. In our survey, we found 28% of manufacturers felt we were in a recession, up 20 points from where we were a year ago. But really what we did see, the big shifts also were that the sense that we were growing a year ago, much less so today. A year ago, 40% of manufacturers felt the economy was growing. That's down to 20% now. 28% believe we're mostly flat. 22% believe it's slowing down. When you combine the two red bars here, slowing down and recession, half of manufacturers believe in some form or fashion the economy is slowing down, which is twice as high as what we saw a year ago. Interestingly, maybe the state's business direction is not as solid as it was a year ago. The economy is not as great, but manufacturers are certainly just as confident about the future of their firm as they were a year ago. Absolutely no change in the data here in terms of confidence level. A year ago, we found 86% of manufacturers were confident about the financial future of their firm. It's at 86% today. No change at all in this data. In fact, 41% of manufacturers say they're very confident about the future of their company. What is interesting about this, I think, is this little table you've got here on the right-hand side. This is a breakdown of the percent very confident. And what we did here, and you'll see a lot of these breaks in this data set, is we looked at manufacturers both by size of employees and also revenue breaks. So at the top line here, see if I can make this work. Aha, right there. The 9 to 49 employees, that's what we generally call the smaller manufacturers. The 50 plus employees are the larger manufacturers. And what you clearly see in this data is that larger manufacturers, in terms of percent very confident, are more confident now than they were a year ago. Smaller manufacturers, a little less confident. Got a little ahead of myself. By pretty dramatic numbers. In fact, if you look at the ones that are two highlighted here, those who have more than 50 employees, the very confidence level is up 18 points from where it was a year ago. We don't see that same level of increase in confidence among the smaller manufacturers. Something else we're kind of tracking are kind of the key business metrics. And we asked manufacturers, do you expect your company's gross revenues, profitability, and capital expenditures for this year to increase or decrease compared to where they were last year, or they probably stay about the same? And specifically, we're looking at the blue bars here, where the percent increase. And across gross revenues, profitability, and capital expenditures, the percentage who expect to see increases this year are down from where it was a year ago. In the case of gross revenues, a year ago was 44% expected increase. This year, it's 38%. We see a 10-point decline in profitability and a 13-point decline in capital expenditures. And where we really see noticeable differences is by revenue size. So for instance, manufacturers who have under $1 million annually in revenue, when it comes to gross revenues, they're expecting that increase to drop pretty strong by 18 points compared to where they were a year ago. Compared to those who have revenues over $5 million, the percentage increase is only down 6 points from where it was a year ago. Same with profitability. We're expecting much steeper declines It increases among lower revenue firms compared to higher revenue firms. And I mentioned those regions earlier at the beginning. We also saw some differences in terms of gross revenues and profitability by region. The Southeast, which is the Milwaukee area, and the South Central, which is the Madison area, the projected decline in increases is not nearly as significant as what we see in the rest of the state. Now, getting a little more specific, we gave manufacturing executives a list of different issues and asked them to rate how important each of these are to them and their countries and their company's success. And we asked them to rate it on a 1 to 10 scale. 1 meaning it's not at all important, 10 means it's extremely important. And the bars you see in this chart here are the percent who rated it a 9 or 10, so on the high end of the importance scale. And at the top of the list here, cost of materials for your products, 57% rated that a 9 or 10. Keeping qualified employees, 55% rated that an 8, 9, or 10. Availability and supply of materials, 53% 9 or 10. Finding and attracting qualified employees, 53% 9 or 10. Those 4 issues, all above 50% high levels of importance and concern. In addition to that, we saw a couple of issues that were noticeably different this year compared to last year. For instance, the availability and supply of materials. A year ago, 61% or 63% rated that a 9 or 10. This year, it's 53%. That's dropped off 10 points from a year ago. We saw a couple of big increases. Overall inflation, that's up 8 points from where it was a year ago. And the big mover we saw in this year's survey was energy costs. A year ago, only 17% of manufacturers rated that a 9 or 10. This year, it's 30%, moved from the bottom of the list a year ago to the middle of the pack this year, a 13-point increase. Again, getting back to company size, because we see some very interesting differences and developing trends when we look at smaller manufacturers versus larger manufacturers. Smaller manufacturers, when you look at the issues most important to them, it's cost of materials, it's inflation, it's availability and supply of materials. Those are the top 3. Larger manufacturers, workforce issues are at the top of their list. Finding and attracting employees, keeping qualified employees are number 1 and number 2, then cost of materials, availability, supply, and overall inflation. Here you begin to see a little bit of the story and narrative I think that's present in a lot of these slides. Larger manufacturers are keenly focused on workforce issues. Another place we see this is we asked an open-ended question, meaning we didn't give them the responses. They gave us their responses in their own words. We transcribed those and then coded and grouped them together. And the question was, what would you say is the 1 or 2 most important issues affecting your business and its future success? In an open-ended format, we found that 44% of manufacturers mentioned something along workforce-related issues. Finding quality and skilled people, employee retention, 44% mentioned that. Inflation was second at 32%, supply shortage, supply chain issues at 25%. Those were the only 3 kind of buckets, if you will, that got double-digit mentions. But even among those finding quality and skilled employees and employee retention, we see a noticeable difference here between smaller companies and larger companies. 38% of smaller companies mentioned some form or fashion of that, compared to nearly 2/3 of larger manufacturers. One thing is pretty clear, manufacturers are hiring. 56% of manufacturers who took our survey said they currently have positions that are open for hiring, similar to what we heard a year ago. Also similarly to what we heard a year ago is that when we asked them how many positions are currently open at your company, about 1/3 said 1 or 2 positions, about 1/3 said 3 to 5 positions, and about 1/3 said more than 6 or more positions are currently open. Very consistent data with what we saw a year ago. Also consistent with what we saw a year ago is that they find it very difficult to find the workers they need. 84% of manufacturers said it's difficult for their company to currently find qualified workers for new or open positions. A year ago, it was 83%. If you look specifically at that very difficult percentage, 48%, nearly half of all manufacturers say it's very difficult to find the workers they need. And perhaps not surprising at this point, those who find it more difficult tend to be larger manufacturers. Those who have more than 50 employees, 58% say it's very difficult, 14 points higher than the smaller manufacturers. Those who have more than 5 million annually in revenue, 56% say it's very difficult, 21 points higher than manufacturers who have less than 1 million in revenue annually. So, when it comes to finding employees, what would manufacturers say their strongest selling point is? As we heard a year ago, it's salary and wages. About a third say that is their strongest selling point, similar, almost identical to what we saw a year ago. Then work environment, then flexible work schedules, work-life balance, potential for career growth, employee benefits, local area, and the products they make round out that list. No real differences or changes over the course of a year on this question. Where I think this question is interesting is, again, we look at this by size of a manufacturer. Those who have fewer than 50 employees compared to those who have more than 50 employees. The top of both lists are salary and wages, right? Where there's differences is that smaller manufacturers tend to focus more on flexible shifts and work schedules, more on a work-life balance, and more on promoting the local area. Whereas your larger manufacturers focus a little more on employee benefits, potential for career growth, and the products they make. So interesting differences between these two segments of manufacturers. We also asked, as we did a year ago, is your company considering any of the following changes to address potential workforce challenges? And as we saw a year ago, nearly 7 out of 10 manufacturers say they're increasing wages and salaries. Again, a number very, very similar to what we saw a year ago. A little bit higher than what we saw a year ago. There are more manufacturers who say they're raising prices as a result. 67% of manufacturers say they are raising prices to help deal with the potential workforce challenges. That's up 5 points from a year ago. Also, we see an increase in offering more competitive employee benefits. That's up 4 points from where it was a year ago. Also up 4 points, allowing for remote work, flexible schedules, changing operating hours, and changing shifts. All of those up 4 points from a year ago. Now, what was interesting here is when we looked at this, again, by size of manufacturer, both in terms of the number of employees and their annual revenue, and to try to streamline this a little bit, we shaded the areas where at least a majority of manufacturers in that demo said they're considering each of these changes. And if you just look here at, here we go, at the under 1 million in revenue, among these different considered changes, there's only one where a majority of manufacturers under 1 million in revenue say they're considering, and that's raising prices. Compared to the other end of that scale, those with more than 5 million annually in revenue, there's 5 areas that they're actively considering when it comes to addressing potential workforce challenges. And so you can see, both in terms of higher revenue manufacturers, those with more than 50 employees, they are clearly taking a more comprehensive, all of the above approach. And that's something I think we heard a lot in the focus groups as well. Some of the things that we heard in the focus groups that manufacturers are doing or getting creative about doing, we're offering free lunches, internal daycare, ride shares, rent benefits, those coming from larger manufacturers in general. Now, we've mentioned expected wages to increase. 62% of manufacturers this year say they expect their wages to increase this year, similar to what we saw a year ago at 65%. And while most expect wages to increase, employee benefits are mostly staying about the same. 68% of manufacturers expect benefits that they offer their employees will stay about the same this year as it was last year. 27% expect it to go up. Only 2% expect it to decline. Also on workforce-related issues, we asked, does your company currently provide health insurance to their employees? 60% said they do, up 3 points from where it was a year ago at 57%. About 4 out of 10 manufacturers do not offer or provide health insurance to their employees. Among those who do, we asked specifically, do you expect the cost that your company pays for health care to increase, decrease, or stay about the same this year? 3/4 of manufacturers who provide health insurance expect costs to go up. Only 2% believe it will go down, and about 1/4 believe it will stay about the same. Numbers that are pretty similar to what we saw a year ago. Okay, shifting a little bit more broadly outside of workforce-related issues, we asked manufacturing executives, do you expect to increase investment in any of the following areas? The two that rise to the top, start there, the same two that were at the top of the list last year: growing revenue and profitability, maximizing productivity. 2 areas that are at the top of the list: expanding sales, employee training, employee development. All of those are above 50%, meaning more than half of manufacturers expect an increase in investment in those areas. Mind you, all of those were down a couple of points on average from a year ago. The one area where we saw a noticeable increase are systems, technology, and automation. A year ago, 43% said they were expected to increase investment. It's up to 48% now, so a 5-point increase in expected investment or increased investment in systems, technology, and automation, which gets us on the topic of automation, which this year we asked a couple of questions related to automation. Big picture, we asked, generally speaking, how important is automation to your company's future? 61% of manufacturers said it was important. 30% said it was very important to their company's future. Numbers that were identical this year to what we saw last year. Only 15% of manufacturers said automation is not important at all to their company. But as we've seen in other places of this data, the differences by size of manufacturing is pretty dramatic. Just look at the percent very important for a moment. Among manufacturers that have more than 50 employees, nearly half say automation is very important to their company's future, 48%. Only 4% of smaller manufacturers say automation is very important. Similar differences by size of revenue. Those under $1 million, only 14% say automation is very important. Those with more than $5 million annually in revenue, 49% say automation is very important to their company's future. We also asked new for the first time, what are some obstacles to implementing automation at your company? And at the top of the list is financing, budget, funding. 30% of manufacturers say that is the biggest obstacle to implementing automation at their company. Second is technology systems obstacles, and then third, at 14%, were training obstacles. Clearly at the top of the list, though, financing, budget, and funding. Shifting gears a little bit to talk about hacking and data breaches. We asked this question last year and were very intrigued by the results. Wanted to see if anything had really changed, so we replicated it again this year. And the question is, has your company been hacked or experienced a data breach of some kind? We found about one out of every 6 manufacturers said their company had been hacked or experienced a data breach of some kind. We heard a lot in the focus groups that it was employee phishing was what they were really concerned about. 80% said they had not experienced it. 2% of manufacturing executives weren't sure, which has been an interesting focus group to probably just have those 2 folks in there. What we saw last year that we said, that can't be right, there's no way this could continue, is first and foremost, really high levels of confidence the manufacturers have that their company is secure. Today, 87% of manufacturers say they are confident that their company is secure from hacking, data breaches, and other technological threats. 28% say they're very confident. Only 12% of manufacturers are not confident that their company is secure. And when you look specifically at the percent who are very confident, those who are very confident tend to be manufacturers who haven't experienced a data breach or a hacking attempt or any type of technological threat at all. Their very confidence level is at 31%. Those companies who have experience and have gone through with this, only 19% of them are very confident that their company is secure. Next, we asked, what are the 2 or 3 most important drivers of your company's future growth? As we saw a year ago, finding new markets, new customers is at the top of the list. 58% of manufacturers say that is one of the most important drivers of their company's future, up 4 points from a year ago. Increasing productivity, eliminating waste, 46%, second highest, very much in line with what we saw a year ago. The other data here is very, very similar to what we saw a year ago. Shifting to having a formal strategic plan for profitable growth. A year ago, we found that manufacturers were pretty evenly divided in terms of whether or not their company had a formal strategic plan. This year, we see an increase in the number of manufacturers who say they do have a formal plan. It's gone up 7 points from where it was a year ago. 57% of manufacturers say they have a plan. And what's interesting about this, the larger manufacturers, if you just look, for instance, at those with more than 50 employees, the percentage who say they have a plan has been steady for the last year. It is noticeably higher than smaller manufacturers. Nearly 3/4 of larger manufacturers have a strategic plan, same as it was last year. But we do see that the increase in that from 50 to 57 overall are coming from smaller manufacturers. Those who have less than 50 employees, a 10-point increase in those who have a formal strategic plan. If you look at those under $1 million in revenue, a 13-point increase in those who have a strategic plan. So that growth and the number of manufacturers who are having a strategic plan are coming from smaller manufacturers this year compared to what we saw a year ago. And manufacturers overwhelmingly believe that having a formal strategic plan is important to their company's future growth. This year in 2022, 74% of manufacturers say it's important. Only 26% say it's not important. As you would expect and as you would hope, those who actually do have a strategic plan, 96% say it's important to their company's future growth. But what is really interesting to me is that those who do not have a strategic plan, the 26% of companies that do not have a strategic plan, 44% of them say having a plan is important to their future growth. So even though they don't, nearly half of them recognize the importance of having one. In terms of exporting, we asked this question last year as well. What part of the world do you expect to see the greatest increase in prospective business? The United States continues to dominate in terms of the area where manufacturers expect to see the greatest potential for increase in business. 82% of manufacturers mention the United States. Second highest is Canada, but a very, very distant second at 13%. Mexico and Europe tied at 9%. These numbers are very, very, very similar to what we saw a year ago. In the United States, it was 83%. Canada was 13% last year. No change there. With the U.S. continuing to see as the greatest opportunity market for manufacturers in Wisconsin. And then finally, COVID-19. Buckley mentioned this at the very beginning. It's still an issue. We didn't really expect it to be. In fact, we only asked 2 questions on COVID-19. Same question we asked here a year ago. What impact has COVID-19 pandemic had on your business, if at all? 36% of manufacturers say it had a major impact. 35% said it's had a modest impact. Overall, 71% say it's had either a major or modest impact, very much in line with what we saw a year ago at 72%. Again, only 7% of manufacturers said the pandemic has had no impact at all on their company. This year, though, we asked specifically, has your company recovered from the pandemic? And we found that most manufacturers say their company has. 57% of manufacturers said they've either completely recovered or mostly recovered from the pandemic. But interestingly, 37% say they have not. We found 27% who said they're about halfway recovered from the pandemic. 10% said they're only a little or not at all recovered from the pandemic. 1 out of every 10 manufacturer. But we also thought this was really interesting, that there's still a significant chunk of manufacturers who have been majorly impacted by the pandemic but have not fully or mostly recovered to this point. So I know we've thrown a lot of data at you, and we'll certainly get to questions kind of here shortly, but we wanted to kind of give you a few slides with a lot of text, since we've given you a lot of data, but just to kind of summarize this a little bit before I turn it back over to Buckley. I think when you look at the big picture for a moment, manufacturers seem to be hedging their bets in terms of the state's economic outlook. On the one hand, they think the business climate is generally heading in the right direction, not as good as it was a year ago, but generally in the right direction. But they are clearly concerned about the economy. 50% of manufacturers believe the economy is slowing down to some degree. On the one hand, manufacturing executives are very confident about the financial future of their company. On the other hand, when you ask specifically about key business metrics, gross revenues, profitabilities, capital expenditures, the percentage of manufacturers who expect to see increases in those 3 areas are down noticeably from where they were a year ago. So despite that confidence, they're not clearly as bullish on some of these key business metrics. And importantly, a lot of that is being driven by smaller manufacturers, both in terms of employee size and revenue. They're the ones who tend to be little less optimistic about how their business is going this year. Same for manufacturers outside of Madison and Milwaukee. In terms of key concerns, very consistent data with what we saw a year ago. The 2 areas where we do see some differences, a higher surge in concern about inflation, particularly among smaller manufacturers. That's their most important issue, or one of their most important issues. And then energy costs. That's up noticeably from where it was a year ago. And there are some important differences in terms of concerns with larger manufacturers squarely focused more on workforce challenges. Speaking of that, manufacturers of all size and all revenues are saying it's difficult to find the workers they need. Nearly half say it's very difficult to find the workers they need. They tell us that they're increasing salaries and wages and also raising prices in order to deal with this. But interestingly enough, smaller manufacturers are taking a much more modest approach to workforce challenges in our survey than the larger manufacturers are. Manufacturers in general, and particularly larger manufacturers, are investing more in systems, technology, and automation. The larger manufacturers tell us, not only in the survey but in the focus groups, that they see automation as a potential solution, long-term solution, to addressing some of their workforce challenges. The biggest obstacles for them: financing, budgeting, funding of automation, then technology systems and training. On data hacking, 1 out of 6 manufacturers tell us they've been hacked or experienced a data breach of some kind. Interestingly, those who are more confident about their company is secured are also the same ones who have not been hacked or experienced a data breach. And then finally, COVID-19, the issue we all hope would go away, is still certainly percolating among many manufacturers. 7 out of 10 say it's had a modest or major impact on their business. And we still find that 37% of manufacturers said they have not really recovered from the pandemic to date. So with that, I'm going to kick it back over to Buckley.
Thank you, Rob. Did I get this? There we go. So when I was looking through the data, it's just a tsunami of numbers. thinking through this of how do some of these interrelate and really create maybe not two-dot trends, but some things we should be watching as we go forward. So I really have three things here that I think are important. First of all, this chronic workforce shortage is actually transforming manufacturing. I mean, the data shows very clearly a split between large companies and small companies. The large companies are having a tougher time finding employees. They also have the expertise and the wherewithal to automate, and they're going all in. So normally you would think that it's just going to be people or machines. But what they're also experiencing with the automation that they put in is that their quality improves, their throughput improves, their flexibility and resilience improves. And so now what they're able to do is some of those parts that they've been outsourcing to smaller manufacturers are now coming back in-house. So if you're one of those smaller manufacturers that's feeding a larger manufacturer, it's something to pay attention to. Because with what I know about automation and what these companies are doing, there isn't a price in the world that you can offer one of your customers to get that business back if they've done this kind of automation, because now they have it all back in-house. Number two is you are able to operate a manufacturer at any given size. Any given size, as long as you were making what you wanted to make. But you're going to have to invest in two things. Number one is you're going to have to invest in technology, not because it's cool, not because it's transforming marketplaces, but because you're not going to be able to find people and you're not going to stay competitive with those larger manufacturers that are going all in. And we're really seeing the market bifurcate between companies that are investing in the future and companies that aren't. And when you make that investment in technology, you've just increased the surface area for cybersecurity attacks. Cybersecurity is going to be key for you to also to invest in. It's not an overwhelming number, but it is significant. And one of the heartening things we saw in the focus groups this year compared to last year is that manufacturers are taking the threat much more seriously and talking about it in real terms. We heard a lot of terms like, we're hoping that we don't get hit. We're hoping that we can stay ahead of the curve. We're hoping that we can recover when things are done. Now more manufacturers, it appears, have plans in place and are being proactive about that issue. But it's going to mean that you have to get to a certain size to be able to afford these investments. And then the third thing that I'm finding really interesting about the data is that we're consistently finding 15 to 25% of companies that are under some pretty severe stress. And in this particular study, we saw these measurements where that was coming out. And again, as I said earlier, we're not sure yet what that means, whether that's just the normal turnover of businesses or whether we really have a systemic problem in manufacturing in Wisconsin. We'll be looking to explore that more as we go forward, but it's something to be watching as we go forward. So if I were a manufacturer, if I were sitting in your chair running a company, what would I suggest? What would I be doing? I think there are four things. Number one is I'd be employing all the above in my workforce strategy. I mean, that one slide that showed what manufacturers that are small are doing, the one or two things, as opposed to what the large manufacturers are doing, was a little bit scary to me. You know, if it's Buck's Bar and Grill and metal bending, and I'm trying to compete on salary with Harley or Johnson Controls or any of the big companies in the area, I mean, good luck to me, right? But if I've got the opportunity to really work and think outside the box and be a little bit more flexible, be creative. And I think it's also an opportunity to show that you really care. And that's a little bit of an anathema to some of us. But I got a couple stories for you. One is from inside manufacturing in our focus groups, and one's from outside. You know, the one from inside manufacturing, we were sitting in a focus group, and we were talking about this issue, and the woman says, you know, we have a half hour for lunch every day. And I was watching my guys go across the street to the gas station and buy lunch. You know, that ain't food if they're going to the gas station. So I hired a chef. So every day she has a healthy meal prepared for us, and we sit down and have lunch together. That's not bad. And last week I was up at the WIDA conference in La Crosse, and I listened to a woman describe how they're attracting people to the city. And she's the head of their concierge effort, the person who's supposed to put everything together and pull them in. And she said, my job is to take care of the issues. If there's a crying baby, it's my job to quiet them down so the parents can concentrate. If they want to see something, I take them. If they want something explained, I find the expert. It's 100 soft touches, she said. And I found that really interesting. What else I found interesting? You know what the success rate is of offers made through this program? 74% to come from around the world to La Crosse. And she's pissed. She thinks it should be higher. So she's still trying to come to grips with that. But those two things really affected me because it's that connection, I think, that's going to make us much more effective with our workforces. Number two, technology has to be a part of your plan. We've been working on productivity as our answer to the workforce issues out there, and we've really become believers that you have to have that plan in place. Both to understand where you're headed and also to hold yourself accountable. And we're getting other people to think that way. With the new grant opportunity that we have through the state, they're believing that now. If we can get smaller manufacturers into the game by giving them a little bit of a subsidy to take out some of that risk, then they're all in. And I think you should be too. And cyber has to be a part of that strategy. Focus on growing your business. If you're not growing, you're dying, right? And it'll put you on your toes and leaning into manufacturers that are improving and maybe a threat that you didn't think was out there. So it puts you in an aggressive posture. And then finally, I'd suggest that you engage a guide. This world right now is way too complicated for any one person to be able to get a full view, a full perspective of what's happening. And if you're running a business, if you're running an active business, you have the opportunity to see that. Now, we happen to believe that we're the best guides for small and medium manufacturers in Wisconsin. And the numbers would back that up. But I think if it's not us, find somebody, because if you're trying to do this alone, it's a very, very lonely journey. And I think you can have much more success with someone by your side. So with that, I thank all of you for coming out today. I thank you for your attention. I thank First Business for their sponsorship.